Welcome to the deep dive. Our mission, as always, is really to cut through all the noise, Take a pile of dense source material and just pull out the key knowledge you need to be properly informed.
Indeed. And today, we're focusing on Ghana. The headline here is something that, honestly, if you had heard it maybe 2 years back, you'd probably have dismissed it as, well, pure fantasy.
Right.
But, markets don't lie. The data point we're seeing here is pretty undeniable proof of a really profound structural shift happening.
Okay, let's unpack that. We're talking about the Ghanaian Cedi, which in 2025 became the world's best performing currency. I mean, we're talking appreciation against the US dollar, getting close to a phenomenal 50%.
50%, yes.
And just to give you some context, this is a country where, maybe 18 months before, inflation was absolutely rampant and the currency was basically in free fall.
Thoughtful pause.
Yeah.
Yeah, a 50% jump against the dollar isn't just some statistical blip you kind of wave away. That's the raw energy of a national policy revolution, really.
It wasn't just tinkering then.
Oh, no. This wasn't your usual central bank adjustments. This was about fundamentally redefining national ownership of resources, which is why we're calling this deep dive, Ghana's Golden Renaissance.
I like that. And like we often find with these amazing turnaround stories, the triumph really starts from a place of pretty acute, painful crisis, doesn't it?
Exactly.
We need to set that stage first. What was the actual problem Ghana had to solve before it could unlock all this incredible potential? #2, the resource curse and the Galamsey crisis, the problem.
Precisely. To really get why the Cedi soared, you first have to understand just how deep the hole was they were climbing out of. You see, Ghana is Africa's largest gold producer. Huge wealth under the ground.
Right.
Yet for decades, it was almost the textbook example of the resource curse. Owning the wealth, but somehow suffering economically, politically because of it.
And the paradox of plenty. All that gold, but the country itself was dollar poor. So what was the actual mechanism? What was driving that really damaging paradox?
Well, the mechanism was deeply rooted in illicit activity. Locally, it's known as Galamsey.
Galamsey. Okay.
Yeah, it's the term for unregulated artisanal small-scale mining, or ASM. Now, we're not talking about the big multinational mining companies here.
No.
We're talking hundreds of thousands of individual miners, often in rural areas, operating completely outside any formal economic system. Well, yes, it gave a lot of people a livelihood. It was essentially a massive, uncontrolled leakage of national wealth.
And the impacts of this Galamsey, they weren't subtle, were they? Our sources really frame it as a crisis with these two incredibly destructive sides, starting with, a genuine environmental emergency.
Yes, and what's fascinating in a grim way is how the environmental disaster actually fueled the economic one. The environmental cost was just immense. Heartbreaking, really.
How so?
Well, if you look at the methods they used in Galamsey, they relied very heavily on toxic chemicals, specifically mercury, to get the gold out of the ore.
Mercury, wow. That's highly poisonous stuff, and it sticks around.
Exactly. And it wasn't contained, not at all. The runoff, the waste, it was systematically poisoning vital water sources. We're talking rivers, streams, the reservoirs people rely on.
Oh, man.
Plus, the sources talk about just terrible destruction of farmland, massive land scarring, rendering huge areas basically infertile. This wasn't some abstract cost on a balance sheet.
Oh, this was hitting people directly.
Directly destroying primary economic assets. Clean water, productive land. Honestly, the human health crisis alone should have been enough to force a change much earlier.
Size. Yeah, it really humanizes the numbers, doesn't it? It's not just about lost GDP points. It's about, life, sustenance for ordinary families. But as truly devastating as that environmental side was, the direct economic fallout, that seems to be what really pushed the currency over the edge.
Now, connecting the dots, the economic damage was, you could say, directly proportional to the lack of any regulation. Because all this gold from Galamsey, mined, processed, sold, completely outside official government channels, meaning it was immediately smuggled out of the country. So the government was losing billions in potential revenue in taxes.
Yeah.
But crucially, they lost control over the foreign exchange that gold generated.
Wait, hang on. So it wasn't just about missing out on taxes, which is bad enough on its own.
No.
When that smuggled gold got sold internationally, the hard currency earned, the US dollars the country desperately needed, It just completely bypassed the Bank of Ghana.
That is the absolute critical point, and it's what really defines the resource curse sometimes, beyond simple tax evasion. The foreign cash earned from the nation's main physical asset. It was flowing straight into the pockets of international buyers, shady middlemen, illicit networks.
Not a cent hitting the official reserves.
Not 1 cent. Ghana was effectively exporting its physical wealth, but importing financial crisis in return.
Wow. So the immediate, totally inevitable result was this catastrophic shortage of foreign exchange. FX liquidity just dried up.
Dried up.
And if you follow global markets, well, you know what happens next. When a central bank doesn't have the dollar reserves, it just can't defend its own currency's value.
Precisely. This structural drain, this constant leak of FX reserves, led straight to that crisis point in 2022-2023. The Cedi just went into free fall.
Yeah.
Massive, brutal depreciation, losing value month after month after month.
And the sources stress this wasn't some slow, gentle decline.
No, it was a full-blown crisis.
Yeah.
Leading directly to crippling inflation.
And that's the consequence right there for the citizen, isn't it? High inflation, sometimes hitting peaks well over 40%, I think.
That's right.
That means a crippling cost of living. Your salary suddenly buys way less fuel, less food, less medicine. The whole nation was starved for dollars, yet sitting on top of these huge gold deposits. That must have been the moment, right? That really harsh realization that policy had to change, had to formalize things and reclaim that wealth. That was the trigger for the big pivot.
A crisis that, ironically, provided the political backbone needed for what came next, which was an incredibly bold, almost unprecedented policy move.
Because just cracking down wasn't working.
It wasn't enough, no. They realized they had to offer something better. A legal and, crucially, a profitable alternative to Galamsey. #3, the GoldBod Revolution. The solution.
Okay, let's pivot right into that solution then, because this really is the core of our deep dive today. The policy revolved around creating this new entity, the Ghana Gold Board, or GoldBod. What made GoldBod different from, say, earlier government attempts to regulate things?
Well, GoldBod wasn't just another regulatory body in the traditional sense. It was conceived as a centralized national strategic buyer.
Buyer, okay.
Yes. Its mission was nothing less than redefining national ownership by formalizing the entire artisanal mining sector. And this is key, ensuring every single ounce of gold actually benefited the national coffers. It was framed more as a strategic partnership aimed at economic inclusion rather than just state control.
That distinction feels really important, partnership versus just a crackdown.
It's vital.
Because like you said, a purely military or police crackdown, it often just pushes the activity further underground, maybe even across borders. This needed buy-in, didn't it? From the very miners who were operating illicitly before.
Absolutely. They needed an economic carrot, not just a stick. And the mechanism for that carrot was this direct purchase model. GoldBod was set up to be the official, transparent, and importantly, reliable national gold aggregator, the single trusted buyer for all gold coming from these ASM miners.
Okay, conceptually simple enough. But the genius, I guess, must have been in the incentives. Why would hundreds of thousands of miners who were used to the quick cash, the anonymity maybe of the smuggling networks, why suddenly trust and sell to a government agency?
2 words, reliability and price. Before GoldBod, miners were really at the mercy of these opaque, shadowy middlemen who offered exploitative prices, maybe didn't always pay, could disappear overnight. GoldBod, on the other hand, offered a state-backed guarantee. It was reliable, it was consistent, and crucially, it provided a fair, internationally benchmarked price. The sources really highlight how important that transparent pricing was for building trust.
Stability is huge, definitely. But, okay, if the smugglers, the black market guys, were offering hard U.S. dollars, how could the government possibly compete on that front without just, emptying its own vaults? This leads us to what I thought was the most fascinating detail of the policy.
Slight chuckle.
Yeah.
Yes, the currency of payment. This is where the policy got really clever. It sort of turned the system's weakness, the demand for dollars, into its strength.
Yeah.
The price GoldBod offered. It was often paid partially in U.S. dollars.
Oh, wow. Okay. That is bold. They actually used the very thing the smugglers were leveraging, hard currency, as the lure to bring the gold back into the formal national economy.
It was like financial judo in a way. You see, for an ASM miner, getting hold of U.S. dollars is really useful. Buying better equipment, maybe storing some wealth outside the Cedi, international transactions.
Sure.
By providing that dollar component, even if it was just a fraction of the total payment, the state immediately offered a benefit that was way better than the risk and the instability of dealing with smugglers. They effectively formalized the miners' own desire for hard currency.
I can just imagine the political arguments around that, though, giving hard-earned state dollars directly to individual miners. That must have sparked some debate. Was there pushback? People saying this was just legitimizing dollarization within the domestic economy?
Oh, there was definitely significant skepticism initially. Critics argued exactly that they were just subsidizing dollar use, potentially weakening the Cedi further in the long run.
But
the data, pretty quickly, proved the model worked. By centralizing the purchase, GoldBod was still acquiring 100% of the physical gold, and therefore it controlled 100% of the resulting foreign exchange when GoldBod sold that gold on the international market.
Ah, I see.
That small portion of dollars paid out to the miners. Think of it as an operational cost, a necessary expense to secure the much, much larger inflow of dollars that the gold represented overall. It was a calculated trade-off, really, to assert national economic sovereignty over that resource flow.
And the impact wasn't gradual, was it? Which really speaks to how powerful that dollar incentive must have been. The sources show the results were almost immediate, and the numbers are just staggering.
Staggering is the right word. The gold that used to vanish across borders, now flowing directly into the national system. In just the first 10 months of 2025, the official export earnings from this newly formalized ASM sector, they more than tripled.
Tripled to what final figure?
Surging to an incredible $8 billion.
$8 billion in 10 months.
Let's just pause on that number. $8 billion. Previous estimates, educated guesses really, about how much was being lost to smuggling were in the billions annually. So, securing $8 billion in official revenue in less than a year. That represents a massive renationalization of wealth.
Yeah.
This is money that was previously just gone, fueling who knows what illicit economies, now secured, flowing directly through the Bank of Ghana. It's powerful proof that if you redefine ownership, if you formalize a sector that was underground, you can unlock enormous national wealth almost overnight.
That $8 billion figure, it's not just a number on a page, it's the fundamental muscle, isn't it, behind this whole economic miracle we're talking about?
It absolutely is.
But we do need to touch on the other side of GoldBod's job. It wasn't just about maximizing the cash, right? It also had this mandate for strict environmental guidelines.
Correct. That was critical for the program's legitimacy and, frankly, its long-term sustainability.
Okay.
You couldn't just swap one crisis, the FX shortage, for another, like total ecological collapse.
Right. Keep digging, but destroy the land wasn't the plan?
No. The policy aimed for sustainability by mandating responsible sourcing. So, miners who wanted to sell to GoldBod, who wanted that good price and the dollar component, they were required to follow specific environmental protocols, things designed to mitigate the use of those toxic chemicals, like mercury, and also commit to responsible land reclamation afterwards.
What did that mean in practice? Were they pushing for specific new technologies? Because getting away from mercury, which is easy but awful, isn't simple?
The sources suggest a strong push towards mercury-free methods, yes. Things like gravity concentration techniques, which are cleaner. Plus, lots of training. But maybe more importantly, compliance became non-negotiable. It was tied directly to getting that spate-backed price and the dollar incentive.
Ah, using market access as the lever.
Exactly. They policy essentially weaponized market access for good. If you want to sell to GoldBod, the reliable, high-paying buyer, you have to prove you're sourcing responsibly and you're committed to fixing the land afterwards. It cleverly shifts the burden of environmental care onto the economic actors themselves, which, let's face it, is usually far more effective than trying to police thousands of hidden illegal operations. Hashtag tag 4, the economic miracle, the impact.
Okay, so let's follow the money. We formalized the sector, we stopped the smuggling, we secured this incredible $8 billion in revenue that was previously just vanishing, and that revenue is now flooding into the central bank's reserves. This is the pivot point, right? This is where the Cedi goes from being in crisis to becoming this world beater. What actually happens mechanistically when billions of new foreign exchange dollars hit a central bank's balance sheet like that?
Well, first, the Cedi stabilizes, and then it starts to soar. This is where the simple mechanics of FX liquidity really come into play. That appreciation we talked about, nearly 50%, it's the direct, undeniable result of the GoldBod policy succeeding. That $8 billion, that's the firepower the central bank desperately needed but never had before.
So suddenly the supply of dollars inside Ghana starts to outweigh the legitimate domestic demand for imports.
Far outweighs it.
Yeah.
And notice, This wasn't like a typical central bank intervention where they might be, say, selling off their precious reserves to try and prop up a falling currency.
No, this was the opposite.
Completely the opposite. This was a massive inflow, driven by newly nationalized wealth flooding the system. They achieved a kind of natural structural re-rating of the currency's value.
And that changed market psychology too, presumably.
Hugely. The central bank didn't just have enough reserves to meet import demand anymore. It had reserves to project confidence. It could intervene decisively against the kind of speculative trading that had probably helped push the Cedi down so much in the crisis years. That speculative risk just evaporated because the market could now see a continuous, formalized, guaranteed flow of dollars coming in thanks to GoldBod's operations. The game had changed.
This is where we really need to connect it back to the human impact. Because, a strong currency, financial strength.
Yeah.
It's all a bit abstract until you see how it actually translates down to the kitchen table. So when the Cedi strengthens that dramatically, what's the immediate tangible benefit for the average Ghanaian family?
And this is probably the most crucial part of the whole story, the why it matters. A strong Cedi dramatically, almost instantly, reduces the cost of imported goods.
Okay.
And think about what a developing economy like Ghana has to import. Fuel, right? For transport, for power generators, essential medicines, raw materials for any local manufacturing.
All priced in dollars, usually.
Exactly. So when your currency appreciates by nearly 50% against the dollar, the Cedi cost of all those essential imports, it drops significantly, almost overnight.
Ooh, wow. That must have felt like immediate relief, especially after the kind of inflation they'd been battling.
It was like an instant shock absorber for the economy. This directly helped to tame inflation. The prices people were paying for staples, for necessities. They started to fall, or at the very least, they stabilized rapidly.
And for the average family.
It translates directly into an increase in their real wages, their actual purchasing power. Your paycheck suddenly goes further. It's the difference, really, between that crippling economic anxiety they'd been living with and actually having some breathing room. Maybe enough to invest a little more in health or education for the kids. It's huge.
But the story didn't stop there. The government didn't just, sit back and enjoy the strong currency.
Yeah.
They used this newfound stability to implement something quite sophisticated, a gold price hedging program. Now, to a lot of listeners, that might sound complex, maybe even risky for a developing nation. Can you unpack that a bit? What was the thinking there?
Yes. That decision, the hedging program, it signals a certain level of financial maturity to the international community. Essentially, a gold price hedging program is a financial strategy. It's designed to protect those growing foreign reserves from future ups and downs in the global gold price.
Because they were now generating $8 billion a year tied directly to gold.
Exactly. When your national income becomes so heavily linked to a single commodity, you are inherently exposed to that commodity's price swings in the global market.
So the risk is, if the price of gold suddenly drops sharply tomorrow, that $8 billion they earned might suddenly buy a lot less on the world market. Is that the idea? How does hedging stop that?
Precisely that risk.
Okay.
Hedging helps counteract it. They'll likely use financial instruments like forward contracts, maybe options. By hedging, they essentially lock in a guaranteed minimum price, a floor price, for a portion of their expected future gold sales, maybe looking 6 months or a year ahead. This protection helps stabilize the national revenue stream. It means the government can budget more reliably, plan spending based on a guaranteed level of income, regardless of whether the gold price jumps up or down next month.
Was there debate about whether this was, too complex or too costly for Ghana to be doing? Because managing these kinds of financial derivatives, it requires pretty specialized expertise, right?
Oh, absolutely. There would have been internal debates. And there's always a cost to hedging. You usually give up some potential upside if the price skyrockets in exchange for that downside protection.
Sure.
However, the decision to do it anyway, it strongly signaled commitment to long-term fiscal planning over just, chasing speculative gains for a commodity boom. And that commitment sends a very powerful message to international financial institutions, think the IMF, the World Bank, and also to private investors. It says, Ghana is serious about stability. They're managing their resources responsibly. This isn't just a temporary windfall they're hoping lasts, and that, in turn, significantly enhances their sovereign creditworthiness, makes it easier and cheaper to borrow, if needed.
And that focus on strategic, forward-looking financial management, That's what really attracts a serious long-term investment, isn't it? Beyond just the currency number. This kind of stability fosters, well, renewed national confidence and, crucially, much greater economic sovereignty.
Confidence is definitely contagious in markets.
Hmm.
Global businesses, foreign direct investment, FDI, they watch currency stability like hawks. So what message does Ghana send when it successfully formalizes a huge illicit sector, appreciates its currency 50%, and implements prudent hedging?
It says, we can solve our own big structural problems.
Precisely. It screams capability. It signals lower risk. Investors see a stable currency, which hugely reduces the foreign exchange risk that's often a massive barrier for big long-term projects in developing economies.
They worry they won't be able to get their profits out without losing a fortune on the exchange rate.
Exactly. Plus, when the government has stable, secured revenues like this, it provides solid backing if they need to issue government bonds or take out loans for infrastructure. It just makes Ghana a vastly more attractive destination for investment because people are confident the economic management is sound.
And the government's own ability to spend, its fiscal space, that must have just expanded massively.
It's the very definition of reclaiming economic sovereignty. When the government isn't constantly fighting fires, battling inflation, desperately defending the currency, servicing huge debts made worse by depreciation, it can actually start allocating resources strategically.
To things that matter long term.
Yes. The source material really emphasizes this. It allows for significantly more investment in those critical areas. Building roads, improving schools, strengthening healthcare. Ghana effectively moved from being a hostage to the whims of the black market and global speculators to actively shaping its own economic future. Hashtag tag tag shag, time tag V. A model for Africa. The legacy.
Okay, so this is where Ghana's story really transcends its borders, isn't it? It becomes potentially a continental beacon because it seems to effectively shatter that old, really pessimistic narrative about the resource curse that's haunted so many resource-rich African nations for so long.
Yes. This is the enduring legacy, potentially. For decades, the dominant story, the assumption almost, has been that having valuable resources inevitably leads down a path of corruption, inequality, and leakage. Ghana has provided concrete, tangible proof that doesn't have to be that way.
That policy can change the outcome.
That proactive, smart, inclusive policy can overcome those historical patterns. Their success serves as a template, really, for active economic sovereignty and much better resource management.
And the Ghana model itself, particularly the GoldBod framework with its incentives, it sounds like a clear, replicable blueprint now, which is fantastic news, right? A successful African solution potentially being adopted by other African nations facing similar issues.
The replicability factor is huge because, let's be honest, the problem Ghana faced, it's not unique. Far from it. Many resource-rich nations struggle with how to formalize artisanal and small-scale mining or, other primary resource extraction sectors that operate largely in the shadows.
So what's the core blueprint?
The model offers a pretty clear, maybe three-step process. First, you have to formalize the sector, bring it out of the shadows. Second, offer powerful market-based incentives like that crucial dollar payment component to encourage participation, make it more profitable to be legal than illegal. And third, crucially, centralize the foreign exchange that results from that formalized activity. Make sure it flows into the national reserves, benefiting the whole country, not just disappearing.
It seems to hit that sweet spot, doesn't it? Balancing the state's need for control and revenue with the individual miner's need for a decent, reliable income.
It does. It fundamentally replaces those unpredictable, often exploitative, illicit middlemen with a stable, state-backed buyer. And in doing so, it captures the economic rent, the excess profit for the nation, while simultaneously improving the income and stability for the miners themselves. It's designed as an inclusionary solution, tackling both the economic need and the social dimension of the problem.
And we're already seeing signs that this isn't just theoretical. The sources mentioned Sierra Leone, for instance, has publicly stated they're looking closely at Ghana's reforms. They want to study and potentially replicate the model for their own gold and diamond sectors.
That's immediate, powerful validation right there.
Yep.
And it suggests, maybe, the beginning of a broader regional shift in thinking, a shift towards a core philosophy. National wealth must, first and foremost, serve the nation itself. The success in Ghana gives political leaders in other countries both the courage, perhaps, and the technical roadmap they need to start tackling these often politically tricky, deeply entrenched informal sectors.
And that, in turn, can create that virtuous cycle we always hope to see in development, right?
Exactly.
Economic prosperity built on a more secure footing then allows for the funding of things like environmental restoration, which improves public health.
Right.
Which strengthens the workforce,
Right.
which can lead to even more prosperity down the line.
And we absolutely shouldn't let the immediate economic wins overshadow that crucial long-term commitment to environmental responsibility that's baked into the GoldBod model.
Right, the land reclamation mandate.
Yes, the requirement for extensive land reclamation and environmental restoration. They're actively working to clean up those polluted rivers, to heal the scarred land that was such a visible victim of the unregulated Galamsey crisis period.
That really rounds out the idea of a golden renaissance, doesn't it?
Yeah.
It's not just about the city's exchange rate. It's about restoring the nation's natural capital, too, ensuring that this economic success is built on a genuinely sustainable foundation. It's proof, perhaps, that economic growth and ecological health don't have to be enemies. ####6s. Conclusion and final thought.
Okay, so let's try to bring this incredible deep dive home. Let's synthesize what we've really learned here today. Ghana went from a currency in absolute crisis, fueled by rampant gold smuggling and the devastating effects of the resource curse, to having quite literally the world's best performing currency in 2025. A staggering turnaround.
And the key driver, the engine behind that change, was bold structural policy. Specifically, the GoldBod initiative. It was a courageous choice, really, to formalize a massive underground sector, and then, crucially, to channel that resulting $8 billion in revenue directly into the National Reserve. That structural shift gave the Cedi the liquidity, the backing, and the market confidence it needed to soar. So the Cedi's strength isn't just a number. It's really a direct testament to a nation deciding to stand tall, take control of its most vital natural resource, and actively chart a course towards sustainable prosperity for its own people.
Yes.
Focusing on transparency, on including the miners, and on smart strategic financial management.
And I think the core lesson here, whether you're a financial analyst or a policymaker listening, is that sometimes the greatest untapped national wealth isn't buried deeper in the ground waiting for new discovery. Often it's already there, circulating in the shadows. The real wealth unlock comes from successfully formalizing and nationalizing those previously illicit existing economic activities.
Which brings us perfectly to our final provocative thought for you, our listener, to mull over. We've talked a lot about how the success of the GoldBod model really hinged on using the US dollar as that key incentive, right? To lure miners away from the black market smugglers.
Yes, the dollar component was critical.
It provided that immediate stability and buy-in, but if the long-term goal for Ghana, or really for any sovereign nation, is ultimately to perhaps de-dollarize further, to assert full independence for its own currency.
Slight smirk. Then the question becomes a bit tricky, doesn't it? Does the very success of the GoldBod model, by legitimizing the US dollar as the most powerful incentive for bringing national resources into the formal system, does it inadvertently create a new kind of dependence? A dependence on the very reserve currency it initially sought to gain ground against.
Exactly. What happens next? What strategic policy adjustments might Ghana, or any country following this model, need to prepare for down the road? How do you maintain stability if you eventually try to shift away from using that dollar incentive and transition the whole formalized sector to trust and rely solely on the strength of your newly stable but still local currency?
That's the next chapter, perhaps. Fascinating challenge.
Definitely food for thought. Thank you so much for joining us for this deep dive into Ghana's truly remarkable turnaround. We'll see you next time.